So which legal entity do you need to use for your new business, and what other legal requirements do you need to cover? So there's a number of options such as trading trust, sole trader, partnerships, an LLC, limited liability company. So what's the difference and which is the best one for you? What should you use? So this is a compilation from a number of previous videos. So excuse the change in lighting, clothing, but this video will give you an overview of the various legal structures here in New Zealand and help you decide which is the best structure for your new business. It's relatively easy to start a business as a sole trader. You don't need to go through legal process or to register yourself or your business with a government agency. A sole trader operates a business on their own. There is no formal business structure and everything is in their personal name. They can buy, they can sell, they can employ people, and they control, manage, and own their own business. They're obviously entitled to all the profits. Now, there's no formal structure or approval needed, and most sole trader businesses can be established without any paperwork. It's quite common enough for a business to start as a sole trader and then move to a limited liability company structure as the business grows. Being a sole trader can be a flexible way to work. You are your own boss. You can employ staff, but you may also be your entire staff as well. As a sole trader, you pay tax on all the income you earn from your work, you can claim your work expenses to reduce your personal income tax, and you are personally responsible for all your business debts. But you also keep control of the business and, of course, you collect its profits. At the end of each financial year, you must complete a tax return and submit that tax return to Inland Revenue. To become a sole trader, you simply must have a personal IRD number. Now you use that for paying income tax and or GST, and then you need a New Zealand business number, an NZBN. Now this is a unique identifier for your business and you can register for that NZBN online. You'll also need to tell Inland Revenue you've become a sole trader, and you'll need to register for GST if your revenue is over $60,000 a year. As a sole trader, you are responsible for all work-related debts. You can draw money from your business's profits as you need them for personal use, but make sure you keep a record of the money taken from any work bank accounts for your living expenses. Now, you can claim back many of the expenses you incur in the day-to-day running of your business, and that will help reduce your tax bill. But you must keep accurate and complete work and accounting and financial records. Now this includes banking information, proof of your income, expenses, invoices, and cash books. If you're not confident about looking after your own financial books, think about getting online accounting software and or a bookkeeper to help. So to sum up, the good stuff includes, it's easy and fast to set up as a sole trader. Startup costs are low. There's no legal or registration fees, and you control the business, get all the profits, and you can deduct expenses. You can, of course, convert to a limited liability company at a later date. Now, the not so good stuff. Remember, you are personally liable for all debts. Now, getting loans or investment from banks, that can also be rather challenging as a sole trader. And at the end of the day, all your hard work's complete. It's much harder to sell a business as a sole trader than as a limited liability company. One of the primary benefits of being a sole trader is simplicity of the structure. As a sole trader, you're the sole owner and decision maker for your business. Now, this means you have complete control over all aspects of your business, from operations, finances, marketing, and sales. This allows you to make quick and efficient decisions without having to consult with partners or shareholders. So another benefit of being a sole trader is the flexibility of the structure. As a sole trader, you have the freedom to set your own working hours and schedule. Now, this allows you to work at your own pace and to prioritize the tasks that are most important to you and your business. This flexibility, particularly beneficial for individuals who have other commitments, such as caring for family members or pursuing other interests, or may even have a separate job. In addition to the simplicity and flexibility of the structure, being a sole trader also offers financial advantages. Now, as a sole trader, you're able to keep all of the profits the business generates. Obviously, you have to pay tax, but this means that you have a potential to earn a higher income than you would do if you were working for someone else. Furthermore, as a sole trader, you are able to claim expenses and deductions that are related to your business. Now, this can help reduce your annual tax bill and increase your overall real income. One of the best benefits I can see of being a sole trader is the opportunity to build your personal brand. As a sole trader, you are the face of the business. Now, this means you have the opportunity to build a strong personal brand that is closely associated with your business. This can be particularly beneficial for individuals who have a strong passion for their work and want to create a business that reflects, well, their personal values and their personal beliefs. Being a sole trader also offers the opportunity for personal growth and development. Now, as a sole trader, you are responsible for all aspects of the business. So this means you have the opportunity to learn new skills and gain new experiences. This can be particularly beneficial for individuals who are looking to develop their business acumen and to gain practical experience in business. A New Zealand Limited Liability Company is a separate legal entity from its shareholders. The company can deduct trading expenses from its income and will pay tax on its profits. If a company's expenses are more than its income and it makes a loss, it may not have to pay tax. If the company distributes profits to its shareholders, shareholders will pay income tax on the dividend, but may also get tax credits back from the LLC to help offset those payments. As a typical limited liability company, its shareholders cannot be held liable for the total debts of the company, but are only liable up to the value of their shareholding. Now, we'll talk more about that later on. The New Zealand Companies Act of 1993 regulates LLCs in this country. Before we outline registering your company, we should talk about an LLC. What is it? And cover some of the main points of a New Zealand limited liability company. So the first is limited liability. A shareholder's liability is limited to the value of their shareholding. Number of shareholders. The minimum number of shareholders needed in an LLC is 1. An LLC can be managed by only one director, but that director must actually be a real person, so it can't be another company or entity. The LLC must have a name different from all other company names in New Zealand, and it must have the abbreviation LTD at the end of their company name. Every LLC must have a physical office address, not a post office box. An LLC is a formal and legal entity, and it's separate from its shareholders and owners. Now, as the name would indicate, the individual shareholder's liability is limited to their share of ownership of the company. Now, these days, limited liability companies really don't protect you as much as they did in the past. They do protect you from the debts that your company would owe if your business should fail, but only if you have not personally guaranteed them. Now, just bear in mind that this limitation of liability would not apply if the company was deemed to be trading recklessly or while insolvent. Now, in that case, the directors would still be liable for the debts of the company. Now, it's also worth noting that if your employee damages something, you can be held personally liable as a director. Now, if your employee takes you to court for unfair dismissal, you can also be held personally liable. But here's the good news. Even though LLCs don't protect you as much as they used to in the past, there's something called public indemnity insurance, and that does. Now, that insurance will cover accidental damage from your staff to anything, anywhere, workplace accidents, ACC disputes, employee disputes, and other costs associated with those events. So it certainly pays to have a good insurance broker as part of your professional team of advisors. Now, when it comes to protecting personal assets from a business failure, consider using a family trust in conjunction with an LLC. Now, it makes sense to use a trust because trusts can protect assets from business failure in most cases, although there are some exceptions. So you should speak to your lawyer and your accountant before deciding which is the right entity for you. You already know that you want to form an LLC in New Zealand, so the next steps are as follows. You'll need to draft company bylaws as the first step to forming an LLC. Now, these bylaws are the constitution of your limited liability company. Simply put, they define its structure and how it will operate. Now, to make things easier, you can use an existing set from another company and just change the details, personalize this for your own company. Now, your lawyer or your accountant should be able to help you here. You should also include a shareholders agreement if there's more than one of you, setting out how the business will trade, the roles and expectations of the shareholders, and most importantly, how the entity will be dissolved or valued. You'll need to set up a RealMe login to register your business online. Now, once you have this, you can check the availability of your desired company name by searching the company's register. You can reserve the name for your LLC and then you can register your LLC. Registering your LLC online will automatically generate your New Zealand business number. Now, that's an NZBN. This is a unique identifier for your business, a kind of registration number, if you will. Now, to register your business, you'll need to have the following documentation to hand when you form your company. You'll need to have full contact details for your LLC, email addresses, physical addresses, and any relevant mailing addresses if they're different. You'll need to have full details of your company directors and full details of your shares, the number of shares, who has them, and the shareholders. Once you have registered your LLC online, you'll need to obtain a tax number through the Inland Revenue Department. After you have that, you can register for GST and PAYE. You'll need to do that if you become an employer. Shareholders have the option not to take profits and let the LLC pay corporate tax, or to receive their share of the profits and be taxed as individuals via a personal income tax. Now, you should speak to your accountant and find out which option is the best for you. Operating out of a business bank account keeps personal and company finances separate. Opening an account can take a while, as New Zealand banks now have to comply with New Zealand's anti-money laundering and countering financing of terrorism law. I know it's a mouthful. It's generally called the AML law. Under this law, banks must make thorough checks on individuals, company shareholders and directors before opening a bank account. So make sure you have the following information for the bank when you go to apply for a bank account. So you'll need documents detailing your business. Now, you'll need brochures, websites, invoices, contracts, etc. You'll need some information. Who are your suppliers? Who are your customers? And you'll need full identification and details of your LLC's shareholders and their directors. Now, that'll include passports, date of birth, birth certificates, addresses, things like that. A small privately owned New Zealand LLC is not required to file annual financial documents or reports with the company's registrar. Now, there are some exceptions to this. However, as soon as the LLC begins trading, it must keep full financial and transactional records. Now, the accounting year begins 1st of April and ends the following March 31st, and every New Zealand company must file an annual return with the Companies Office. Now, that'll verify the LLC is still an active company. It's also worth remembering that all records filed with the Companies Office are available for public inspection. So here they are, some of the advantages of a limited liability company in no particular order. LLC owners, directors and shareholders have limited personal liability for the company's debts and obligations. In the event of financial loss or legal action, the owner's personal assets are generally protected. Now, this protection is particularly important for small business owners who may not have the resources to cover large liabilities. Now, there are some exceptions, and it shouldn't be taken as an opportunity to be reckless with your money. Tax benefits. LLCs in New Zealand are taxed as a separate legal entity, which may result in a lower tax rate overall than individual income tax rates. The business and the owners can be taxed separately, with the business paying corporate income tax and the owners paying personal income tax. Now, this means the business can choose the tax structure that is most beneficial for them. For example, if the business has a lot of expenses and low profits, it may choose to be taxed as a company to take advantage of the deductions. On the other hand, owners may choose to be taxed as individuals to avoid a higher tax rate. LLCs offer more flexibility in management and ownership than other types of business structures. Owners can manage the company themselves, they can hire outside managers, and ownership interests can be transferred or sold without affect the company's operations. A share sale, in other words. The management and ownership can be separate, with shareholders electing a board of directors, an operation manager to manage the business, etc. Unlike a sole proprietorship, a sole trader, a partnership, an LLC can have multiple investors, making it easier to raise capital and expand the business. Now, this flexibility allows LLCs to adapt to the specific needs of the business, the environment, and of course its shareholders. Now, having a company, an LLC, may enhance your business's professional credibility and help attract customers, investors, and business partners. LLCs in New Zealand have limited compliance requirements when compared with other countries. Now, that will help owners save time, money, and effort. So in this video, I'll talk about the several different types of popular business partnerships here in New Zealand and their advantages and disadvantages. A general partnership is a partnership in which two or more partners share equal responsibility for the business's debts and obligations, as well as obviously the profits and losses. Now, this partnership structure is straightforward to set up, and each partner has an equal say in the business's management. However, general partners have an unlimited personal liability for the partnership debts, which means that their personal assets could be at risk if the business fails to meet its financial obligations. Additionally, disagreements between partners can cause conflicts, and partnerships can dissolve if one partner leaves or dies. Advantages: simple and easy to set up, shared workload and profits are shared equally amongst the partners. Disadvantages: unlimited personal liability for each partner, disagreements between partners can cause conflicts, and if partnerships dissolve if one partner leaves or dies. A limited partnership is a partnership in which one or more general partners manage the business and have unlimited personal liability, while limited partners contribute capital but have limited liability for the partnership's debts. This partnership structure provides limited protection to the limited partners, making it an attractive option for investors who don't want to risk their personal assets. However, general partners have, unlimited liability, which means they are personally liable for the partnership's debts and obligations. So the advantages here: limited liability for limited partners and flexibility in managing the business. The disadvantages are obvious. General partners have unlimited liability, and limited partners have limited control over the business. A limited liability partnership is a partnership in which partners have limited liability for the partnership's debts and obligations. Now, this partnership structure combines the flexibility of a partnership with the limited liability protection of a company. However, setting up a limited liability partnership is a little more complicated than setting up a general partnership, and partners may still be held personally liable for their own acts of negligence, misconduct, or under a personal guarantee if that was given. So the advantages: partners have limited liability for the partnership's debts and obligations, and profits, they're shared equally amongst the partners. The disadvantages: more complicated to set up, and partners may be held personally liable for their own acts of negligence or misconduct. A joint venture partnership is simply a partnership between two or more businesses for a specific project or purpose. The partnership structure is often used for joint research or developing projects or collaborating on a specific business opportunity. Joint ventures can provide businesses with access to resources that, they may not normally have on their own, but they also require careful negotiation and planning to ensure that all partners benefit equally from the venture. So the advantages: allows businesses to pool their resources for a specific project, and the disadvantages are no continuity of partnership beyond the specific project or purpose the partnership was formed, and partners may have different goals and objectives along the way. A trust essentially is designed to protect the ownership of assets and to provide an income. Although there are different types of trusts with various purposes, they all have fundamentally the same structure. A trust is a legally binding arrangement to allow a person to transfer ownership of assets to be held in trust for beneficiaries. Now, a very important point to note is, unlike a limited liability company, trusts are not separate legal entities in their own right. Now, trusts can be used to manage personal and family assets and are a structure for managing investments, such as unit trusts and superannuation trusts. In the commercial context, there are trading trusts, and of course, charitable purposes, there are charitable trusts. The basic benefits are protection of selected assets against claims against creditors. For example, maybe you want to protect a family home from a potential failure of a business. Maybe you want to set aside money for special reasons, such as a child or grandchild's education or future, or to support a will and to ensure an inheritance is correctly distributed to your wishes. Now, some of the terms you should be familiar with in trusts are settler, a person or company who creates the trust; trustees, the person who manages the trust. The settler can also be a trustee. Professionals like lawyers, accountants, or companies, they have often set these up, act as independent trustees. Beneficiaries, the people who benefit from the trust. Trusteed, this is the legal document that will formally set up the trust and will outline the management of the trust. The trust deed needs to be very carefully written, certainly by a qualified lawyer. Legal ownership of the trust's assets is transferred to the trustees under the directions laid out in the trust deed, and the settlor then loses the legal ownership of those assets. As a result, from the time the trust comes into existence, trustees are always registered as the legal owner of trust assets. But despite legal ownerships, the trustees are bound to manage the trust assets in accordance with the trust deed. The beneficiaries are the only persons entitled to benefit from the trust assets held in trust by the trustees. The creation of trusts is an extremely complex area of law. Different types of trusts for various situations have been developed over time. And if you're thinking about establishing a trust, you'll need to have a clear understanding of what's involved and how the trust will function in accordance with your wishes. Take good advice and ask a lawyer who is experienced in trusts to work through your requirements. Let them recommend a structure and then set up that trust for you. Hey, thanks again for watching. If you want to know more, hit that subscribe button. Till next time, see you then.